Welcome back to your stocks in CNBC-TV18 and a quick look at the numbers that are coming in as well. We have Atul that reported its numbers just a short while ago. So that has seen a bit of a spike up in trade. But we have Maruti also that has reported their numbers as well. Net profits 3,711 crore. Pole was 3,840 crore. A slight bit below the expectation. Revenue almost seems like in line with expectation. 40,674 crore is what the revenues have come in at as of now. Maruti is holding on to a decline of 1% in today's trading session. We'll wait out for more details that come in terms of the EBITDA margin as well. So keep an eye out on the margins as well, where that is going to be headed. I'll wait out for those numbers as they are flashing on the screen. But profits as well as right now the revenue seems like profit slightly below, revenue seems largely in line with expectation. But we do have Prakash Diwan also who's here to break down the numbers for us and help us understand what are the numbers looking like. Prakash, first cut in terms of the numbers, profits seems slightly below expectation, but revenue seems in line. What are you making of it? Anything that you've seen?
No, so, Vinnii, revenue in any case is a function of the product mix. So is, of course, margins. But what could have happened is that this particular quarter is usually not the best. And most of the people would buy towards the end of March for the depreciation benefit and all of that. But so those sales were never very spectacular. What possibly they've done is they've utilized this quarter to ramp up their inventory on some of the newer launches that they are gearing up for. And they have the new Brezza that's kind of already on the road. And I think it's a quarter of consolidation. So really, we can't read too much into this. There was expectation that margins will be about 10-12% lower on a YOY basis. So if that's kind of built into the price, there won't be any major disappointment that the market will see from this softness. But revenue is something which they can also scale up once exports pick up. But this tariff regime is also something which has been a bit of an overhang in terms of a lot of shipments getting into stages of uncertainty. So I think, given all of that, I think it's a fairly decent set, is what I would say.
Fairly decent set. Prakash, there's one point that I want to highlight as well. My colleague Sudarshan was also mentioning earlier that, when you're looking at valuations for Maruti, right, 1 year forward PE is 23 times currently and 5-year average is 28 times. So valuations are also supportive. Will that come into play as well? And also, if you could highlight in terms of demand trends, specifically for Maruti, is that anything that we should watch out for as well?
So, yes, I think that's a very valid area to look for the demand build-up, the demand creation that could come on the EV side for them. Because remember, Maruti has been late to the party in terms of EV launches, as compared to Tata Motors and M&M. So in terms of the response that they are able to get for that and some of the newer mid-size SUVs that they are relaunching or resetting, those are things that I would look at. Because, see, the year ahead is going to be fairly tepid for auto growth. I mean, generally, autos start doing well after the economy shows very clear signs of having turned around or started growing, which is just beginning with interest rates coming down, some sort of GDP estimates coming through, which are fairly okay. But, even if you look at PMI data, it's been fairly encouraging for April. But it's not something which you really can see for the whole year as yet being very robust. So my sense is auto growth will probably be about 4 to 6% depending on models and segments. Within that, Maruti could probably look at regaining market share, which they had lost to some of the new incumbents like Kia and even the older ones like M&M and all. So I think this thing from the management, commentary from the management in terms of new launches and how they plan to scale up the EV segment is going to be more critical going forward. The stock will probably start responding to that particular commentary rather than the past numbers.
Absolutely. Surely keeping an eye out. And just an update in terms of the margins. We had them flashing at the bottom of the screen right now. EBITDA margins have come in at 10.5%. Expectation was 12% of CNBC-TV18 poll. And obviously versus last year also, the EBITDA margins were 12.3%. So we've seen a sharp contraction, Prakash, in this terms of the margins that we're looking out for. Is there any sort of a worry that, when you're looking at such margins? Because it's a very, very sharp contraction there, even versus expectations.
At least our expectation was about 10-12% kind of this thing softness in margins, and it's kind of in line with that. But yes, on an absolute terms, if you take expectations aside, it's definitely something which could cause a lot of concern. But that's the whole thing. This particular quarter, they've used to keep revenue at a decent level, while not probably pushing for high value products or high margin products, and it's more of restocking that's probably happened given the March this thing end. But I think it's going to be more of their gearing up for new launches is what I can make out. This year will probably be a year of many launches. A lot of them will get redesigned and relaunched. Some of the blockbuster models. So it's going to be more of that. Consolidation is what I would explain that this quarter has gone through, and that's why revenue probably is not seen so much, but operating leverage is probably diminished a bit, and that's why the margins are impacted.
Okay. Okay, Prakash, thank you so much for joining in with us and, explaining us what the numbers of Maruti actually indicate. Thanks so much for that. As of now, Maruti is not seeing a very sharp cut as well. Seems like we are seeing in terms of a percent of a cut, which was there when the earnings were reported as well. So keep an eye out on Maruti Suzuki. Some bit of a decline there. But yes, that's something to watch out for. Margins is where we've seen the big miss coming in on that front. That's something to watch out for. Seems like expenses could be an issue as well. And consolidation is what Prakash highlighted, is how we could term Q4 coming in for the company. Obviously, we'll wait out for more details coming in from Sudarshan soon as well. But yes, that's Maruti Suzuki as of now at 11,812, down 0.6% in today's trading session. Some bit of a spike up again is what we're seeing there.